You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music must mean it is Interview Tuesday. Once again, time here on the Options Insider Radio Network for our Options Insider Radio program. The program where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the aforementioned network, reminding you, if you like what you hear, this show, all the other nearly dozen shows we do on the network these days. Keep rating and reviewing it wherever you get this content. We've seen just a slew of new additions to the network these days. It really does help new folks discover this content in these troubled times. So keep rating and reviewing. Keep those questions and comments coming in too. We do love to hear from all of you out there. And let's see who we're hearing from on the show today. I'm pleased to be joined once again by Jim Nevotti, the president, and Ravi Jain, the director of risk and derivatives over there at Sterling Trading Tech. Gentlemen, welcome back to the Options Insider Radio program.
Thank you, Mark.
Thank you, Mark. We appreciate it.
It's been a little bit since you and I last chatted. I do believe it was way back in late 2019 in the STA conference down there in DC. So it's been quite a while, I should say. Quite a bit has happened since October of 2019, a pandemic or two, a few other minor inconveniences around the world. So a lot's happened. A lot's happened on the options front as well, of course. And with the network, we've seen just an explosion of new additions, new listeners over the course of the past year. So maybe let's start there for all of our new listeners here, gentlemen. I want you to give them a quick overview of what the heck it is you guys do over there at Sterling Trading Tech.
Sure. So this is Jim Nevotti. I'm president of STT. So Sterling Trading Tech is a complete trading technology solution provider. We offer trading platforms, OMS and infrastructure products, and a advanced cloud-based risk and margin system. So we're a one-stop shop for the capital markets worldwide.
I like that. A one-stop shop for the capital markets. Well, I was only slightly joking there at the top of the show when I said it's been a bit of a tumultuous year, but it has been quite a bit of action, volatility, call it what you will, out there in the world of options since we last chatted. Let's catch up there. What's it been like over the course of the past year? You guys, of course, offer, like you mentioned, the one-stop shop. So risk, surveillance, monitoring, trading, all of the above. We had an explosion of volume, explosion of volatility. What's the past year and change been like? What's been going on over there at Sterling Tech, gentlemen?
Yeah, so Mark, it's been, first off, congratulations on your success, and thanks for having us on. It's been a wild year. So from the markets have been busy, and you had as a technology provider, it was a challenging year, because you had the kind of at the same time as all technology providers, like all businesses in the pandemic, were getting used to working from home, transitioning people from coming into the office every day to working from various, work at home scenarios along with their families and kids and so forth. You had this, just incredible market explosion of volume and volatility. So it was it's kind of one of these things where it would have been challenging had we all been in the office, and with everyone working from home, it was especially interesting. But it's been a great year for us. We've had record growth as a company. We've handled the volatility extremely well. A lot of the stuff we've done in the last few years in terms of infrastructure improvements, and really investing in our network and our architecture has, really paid off this year. So it's been it was very satisfying, although very challenging. And then Ravi as the head of our risk product line, probably has some other, additional commentary there. From a risk management standpoint, it was also a very interesting year, so to speak.
Yeah, Ravi, not much risk to really analyze over the past year. I'm guessing you and your team are pretty bored over the past year, Ravi.
Oh yeah, risk? No, it's been absolutely incredible. I mean, we all know the growth in the options volumes this year, both predominantly coming from the retail sector, and it's just like a huge market just discovered options. And we've seen stuff that we've never seen before. I mean, a year and a half ago, if you told me a stock option implied volatility would be 400%, I would say that's, rare, if anything, And this year, what did we see? We saw up to 1,000% implied volatility on some active stocks. Never in my life, I imagine, I would have seen something like that. And so that's created a huge challenge in risk management by broker dealers, risk management by prop trading firms themselves, as well as clearing firms. They are, and it's exposed a lot of issues in the market in terms of how to calculate and assess risk and capital requirements for option positions on these super volatile stocks. So, we've been very active in that space in terms of gearing up our risk management system, modifying our risk management system to provide the tools to brokers and clearing firms in particular to be able to assess those kinds of situations. I mean, the amount of dispersion we've seen this year is incredible, where certain names are flying all over the place, and volatility is flying all over the place. And then, a very large section of the market has been relatively stable. So, very interesting market and very challenging from a risk perspective.
Yeah, I'd have to imagine from a risk perspective, this past year is off the charts in many degrees. And even this year, of course, riding in with the wave of meme stocks, we've seen people who are otherwise sophisticated in the options market coming out and arguing and saying, the way we price these options, particularly upside calls, it's all structurally wrong. It all should be much higher to reflect this tsunami of retail interest out there. So I'd imagine there has to be some unique challenges from a risk modeling perspective. I know you upgraded your real-time risk margin engine over the past year. What were some of the tweaks you had to make to accommodate this just tsunami of unprecedented events here, Ravi?
So several things. Firstly, dealing with volatility, volatility surfaces slightly differently. Typically, historically, you would sort of cap volatilities at a certain level on the upside. We had to change that because, as you mentioned, people are rethinking how they price deep out of the money calls now, given that there is a huge interest to actually buy these, as opposed to historically, there was generally interest mostly to sell these options. So that required a change in thinking of how you model your volatility surface, as well as the ability to now shock portfolios at much higher levels, as well as shock within a portfolio shock symbols without any correlations because you can't do the parallel stress test of a portfolio anymore because there's one stock moving up 100% and 10 stocks moving nothing, So you really have to look at idiosyncratic risk a lot more carefully, and those are some of the features we've added to the platform, including analytics that allow brokers and clearing firms to build much more sophisticated house policies, if you will, house policies that include idiosyncratic risk, standard deviation-based risk, concentration-based risk, etc.
That's a great point about the correlation. I mean, who ever before this year would have ever conceived of a stress test that would incorporate GameStop and AMC and Silver and a handful of other disparate names in there, and that was now your stress test? Yet that's exactly what you had to model in 2021, Ravi. So I say it again, it's kind of cliche at this point, but these are head-scratching / unprecedented / insert adjective here times. So I don't envy your position there, having to come up with the models to try to adjust and anticipate all of this, Ravi.
Yeah, and I think what it's exposing is some of the weaknesses in our overall risk and regulatory structure in the industry. I'll give you a really odd example. There was a portfolio of GameStop options that I saw where the regulatory margin requirement on that portfolio was some number, but the amount of money that the clearing firm had to put up with the OCC was 20 times that number. So you have a total disconnect between what clearing firms have to put up with the clearing firm with the OCC versus what clearing firms or brokers charge margin based on regulatory requirements of their clients. And it makes no sense.
Yes, that's one of the many things over the past year that has made no sense. Well, going back to what we were talking about at the top of the show about the dramatic surge of volume over the course of the past year. Of course, the numbers hot off the presses from OCC this week for March, yet again, blowing the doors off it, burying the needle, however you want to describe it, from an options volume perspective. Yet again, the busiest month in the history of the options business. That comes hot on the heels of January, which was the former busiest month. Before that, it was December. So I think this year we have 1, 2, and 3 are March, January, and then February. So this quarter is off the charts. It's the busiest quarter ever conceived of in terms of options. So volume has been hot and heavy, and it has pretty much been hot and heavy since the great rebound that started back in March of last year. You mentioned at the top of the show, Jim, the challenges every firm is dealing with right now in terms of being remote and everything else. Of course, early on in the pandemic, you also had this unprecedented challenge of the entire options business going 100% electronic, talking SPX, you're talking Eurodollars, I don't care what product you're talking about. All of them went 100% electronic for the better part of last year. So this is another unprecedented wrinkle thrown on top of that. And maybe I'm just a jaded cynic, but I expected a slew of outages and all sorts of horrible errors as a result. And maybe volume would even take a hit due to the just many discrepancies we were seeing in the space. But we saw instead exactly the opposite, an unprecedented surge of volume. And the markets, for the most part, held up pretty robustly. Were you surprised that not only the options markets were able to not only just maintain their functioning, but handle record levels of volume in these otherwise unprecedented scenarios, Jim?
Mark, I agree entirely. I was just having this conversation with one of our clients today. The markets, and for the most part, everything held up really well. You saw some high-profile providers have specific outages on specific days, which we all know is going to happen in this industry. But for the most part, you didn't have any big exchange outages. You didn't have any big clearing firm outages. You didn't have anything really ugly hit the industry. And for the most part, things held, and I think that actually really is a big, I think that's actually a big deal. And it's not something very many people are talking about, because you kind of come in and, everyone just expects everything, everyone expects things to just work all the time, which is natural. But, you had, just month after month of record growth and volatility. And And those things are challenges, and those are typically where things fail. And I think the other thing that shows is, the industry really has matured in terms of people are stress testing systems. Things are stress tested. So if you remember back to the flash crash way back when a lot of systems failed, I think the industry has learned from there.
Of course, one of the areas where we haven't seen perhaps the most robust uptime has been on the brokerage space. Has been making a lot of headlines of late. No doubt, a lot of it having to do with just this tsunami of retail volume that is hitting the tape day in, day out. Most of these brokers have been, shall we say, a little bit unprepared for this wave of volume. I know it's something you guys have been watching with great interest over there at Sterling over the course, particularly over the last 6 months or so. What are your thoughts on this ongoing wave of outages on the brokerage space? And have you guys at Sterling experienced anything similar on your vast array of platforms over there?
We have been, we've been very solid. We've been thrilled with how our systems have held up. That's obviously the first concern, right? Is we want, it does sound a little cliche, but we want our traders to worry about their trading, not our technology. And so we've been really happy. We have not had any major outages. Things have gone very smoothly. I feel for some of our counterparts on the brokerage front, it is challenging. And I know, we know, given the number of systems we operate, we know how many different points of failure there could potentially be. So, we've been very fortunate, and, the growth in retail has really been just nothing like I've seen in my career. The growth and, our clients on the education front have just been exploding given the interest of, new traders and coming into the markets. The retail brokerage space has just been exploding. You see on the retail side of things, you see a lot of the challenges retail brokers are having are things like just, they can't open new accounts fast enough. They have just huge backlogs of new accounts because they're just getting so many more applications than they have to, and and they've got processes that they have to follow. So it has been really, it's been a really spectacular year on that side of things.
Well, let's get into that a little bit. Obviously, you have a lot of different offerings that run the gamut from the risk margin and risk modeling for the prop shops out there to more retail-oriented offerings. I imagine the latter, as you just mentioned, have been taking up a lot of your time these days as well. Has all this resurgence of retail, has it caused you at Sterling to maybe start thinking about putting even more effort into more retail-oriented endeavors than you perhaps would in the past? And on a related front, I mean, that side of the space is getting more sophisticated. They're looking for their own offerings and software functionality. In fact, we have a listener right now here in our chat asking, this is Tony Weber, he wants to know, are the general risk practices, models, or advice, or are there any general risk practices, models, or advice that can be implied to help the individual investor? He's looking for the, quote, Sterling lining for the individual investor. I don't know if that's your branding. Feel free to run with it if it's not there, gentlemen. But has this retail awakening, has it caused you to really start thinking about even more retail-oriented offerings in the Sterling suite? And then B, what do you have to say here for our listener who's looking for the quote-unquote Sterling lining for the individual investor? Feel free to copyright and trademark.
So, Jim, I'll take this one. So one of the things that we are looking at is the fact that we've built all this risk analytics technology is to how do we expose that for the use by the retail investor? And so we are looking at taking parts of it and making it palatable to the retail investor and making it available through a cloud-based infrastructure so they can easily go access sophisticated analytics, sophisticated risk, whether it be stress tests, whether it be option pricing or value at risk or other types of measures in an easy to consume fashion, all through a cloud-based infrastructure. So that's one of the new areas we're looking at, and hopefully we'll be able to announce some of that functionality soon, and help some of the retail investors with more, as you said, sophisticated analytics that they need.
This can become part of your branding suite going forward. You're going to offer the Sterling lining here, Ravi?
I like it. I think I'm going to take it and use that. Sterling lining with a cloud infrastructure sounds perfect.
It does look good. I'm sure our listeners are very generous with their rates for licensing and copyright, so I'm sure you guys can work something out over there. Speaking of the retail audience for a bit, another area, and this, of course, covers institutional as well these days, is since the last time you and I chatted back at STA, you had just brought online your new crypto widget. It was kind of a new foray for you folks. Of course, in the year and a half or so intervening, particularly in the last 3 to 6 months, crypto has just exploded into the mainstream consciousness. Bitcoin's north of 50,000, and every other mainstream crypto and altcoin has rallied aggressively over the course of the past 6 months. Even Dogecoin's on everyone's radar and lips all of a sudden. So crypto, a much bigger phenomenon than it was the last time we chatted, gentlemen. So I'm curious, obviously you have your crypto widget. What else do you have in the offing for the legion of crypto fanatics out there these days?
So I can take this one, Mark. So we launched since we were just prepping this, I think the last time we spoke at STA, but we launched a full integration with Voyager. Voyager, as you know, is Voyager, as I'm sure you've heard, is a booming crypto platform that's had record-setting growth. They've been a great partner for us, and what we did with them was it was one of those things where we know the Voyager guys really well, and it was a chance to offer a really integrated solution to where users can launch, users can log into Sterling Trader Pro or Sterling Trader Web or our platforms and trade crypto alongside their options positions, alongside their equity positions, so that it's a one-stop shop and without users having to manage wallets and in some of the nuances, the more challenging retail aspects of crypto. I'm not a crypto guy myself. I don't know if Ravi has any additional commentary other than, I know obviously crypto's been booming, Bitcoin's been booming. Coinbase is IPOing later this month, and I think is expected to release earnings or some information later this afternoon. So, it's an explosive space right now.
Yeah, I think the trend is clearly to give a more equity-like experience, a seamless experience to a client so they can trade their equities or options or whatever else they want to trade alongside crypto without having to open a separate account at the exchange and have a separate wallet, etc. So that's the trend in the industry, and that's, as Jim mentioned, that's what we did with Voyager, and now, going forward, we'll be looking at other such opportunities if they come along.
Well, gentlemen, that music means we're coming to the end of our little sojourn here on the Options Insider Radio program. But you know me, I like to leave our audience wanting more. So before we go, if you want to leave them with a little bit of a hint, a little bit of a tease of what's coming down the pike from you folks over there at Sterling, now is the time, gentlemen. The floor is yours.
So I'll take this one, and Ravi, feel free to chime in if I'm leaving anything out. So, one of the things that we're doing is we're launching what we're calling the Sterling Marketplace, which will be available on our website. Historically, Sterling has been a business-to-business company. We've only recently, in the last year, started going business-to-consumer to where users can sign up directly with Sterling to use our products. We've launched with interactive brokers, but we have other launches in the works, including a launch where users will be able to sign up directly with us and use our Sterling simulator, which lets traders, it's something that we launched a couple years ago, but it's really gained traction in the last year or so with interest in the space. It lets traders essentially use professional trading tools and with live market data and trade markets in a simulated environment so they can learn to trade without actually putting, their real capital at risk while they get through their learning curve. So that's really exciting for me, from my standpoint. Ravi, do you want to talk a little bit about the pending developments in risk?
Yeah, I think one of the key initiatives is global expansion. We are going to going beyond the U.S. and adding a slew of global markets, including Europe and Asia, into our risk offering, which branches us out to a much larger professional audience situated in Europe and Asia.
fascinating stuff. I look forward to how all of this unfolds in the marketplace in the coming months. And gentlemen, if our listeners are intrigued, and clearly they are, for the variety of offerings you folks have over there at Sterling, and they want to check it out, kick the tires for themselves, where should they go? What should they do?
Go to our website, sterlingtradingtech.com. All of our information is on there. We've got information on our products, all of our offerings, contact information, as well as the ability to request demos of our various products. So everything they need is on there. That's where I would tell people to go to start.
There you go. sterlingtradingtech.com, the place to go to begin your adventure. And gentlemen, it was good catching up with you. Hopefully we'll talk again before a year and a half, and hopefully the next time we chat, there won't be, let's say a thing like a pandemic or two in between our next conversation, gentlemen.
That's right. Great talking to you again, Mark.
Thanks for joining us. Thanks to everyone out there for joining us today as well for Interview Tuesday. I also gave you a little surprise live dose of Education Wednesday early on Tuesday. Today got a double dose of boot camp for the live listeners out there. That'll be hitting the podcast listeners, of course. As usual, tomorrow, OPR, as usual, Education Wednesday tomorrow as well. Thursday, your double dose of TWIFO and the option block. Friday, volatility views, and it all kicks off again on Monday with the option block and the crypto rundown, all the way through to Interview Tuesday and another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.